I'm trading a Robinhood account from $0 all the way to 1 million and showing you every step of the way how I get there. Now, on Friday, we did close the account down $1,519.30. It was a 10% move on the day. It's pretty awful. The market sold off. We've been actually bleeding out on the positions for quite some time. Last 2 weeks, we're up to $18,736. And then Apple earnings, Grab did not perform well. It's one of the two largest positions in the account. So we've had some pullback. Obviously, we had a really strong move on Unity software, and we took a lot of profit out and started entering into some longer dated call contracts. But things have been weak in the overall market. Things are starting to pull back. And that's just really the nature of the game, right? Like, you have to be able to stomach these larger swings in your account in order for you to make a lot of money. When you make a lot of money in a quick way, you can also lose a lot of money in a quick way. And you have to be very strategic and try to remove the emotions out of making decisions, because that's how you get into positions where you're taking too much risk. It's like the gambler's fallacy. You start taking on a lot more risk and trying to make back the money that you lost, right? So in my mind, it's like, oh, well, I was up $18,700 and now my account's been draining over the last week. And maybe I start taking on a lot more risk because I want to get it back. I want to get back the money that I lost. But in trading, you cannot panic. You have to just keep your head, keep the wits about you, stick to your system, and ultimately make smart decisions. And the market, it doesn't like to give free money. So this is a very hard thing to do. It is hard to build an account up over time. The less money you have, I would argue it's even harder. Once I actually get this account over 25, 30K, I'm going to start taking a lot less risk and start making more consistent returns. But right now, I'm trying to grow at all costs. I'm trying to grow as fast as I can, and I have to stomach these larger swings in the account. Once I actually am able to get the account to $25,000, $30,000, I'm going to switch up the strategy, focus more on percent gains, small percentage gains, which actually can turn into large dollar amounts over a period of time as you compound your account up higher and higher, rather than focused on making these really small or even large gambles on stocks making an explosive move over a short period of time where I'll make a lot of money or I'll lose money very quickly. And right now I'm just trying to grow by dollars and not percentages. But later I'll want to grow the account by percentages and not dollars. So that's how the strategy will change. Now, a lot is going on in the market. We can talk about it. Just to give you a quick rundown, like this week, we do have data on PMI, which is related to inflation. We just had the Fed who said, no thanks, we're not lowering rates by 25 basis points. Sorry, Trump. Trump lost his mind on Twitter. It was actually kind of funny. But then on Friday, the data came out that they've actually been juicing job numbers, and they revised it by like over 250,000 jobs lower. And the market also sold off because you had the August 1st tariffs, right? So we got a lot on upcoming this week, PMI. Then you got two Fed members speaking, one on Wednesday, one on Thursday, and then one even on Saturday. They put him on Saturday so he doesn't nuke the market, I guess. But then you got Atlanta Fed GDP now on Thursday, so we'll see that. And then obviously like initial jobless claims. So people are starting to look at the market. We've got the 10-year auction, 30-year auction on Thursday, so look out for those as well. But people are starting to think, maybe the overall market is running a little bit too hot. You're having this drawdown. Maybe the job market is worse than what people expect. And the Fed is going to have to lower rates soon. It's kind of counterintuitive, but this move that has happened so far from Thursday to Friday, even though earnings were going pretty well so far for big tech, the Mag 7 actually beat earnings. Amazon, Meta, Microsoft, Apple I was actually surprised on, but nonetheless, everything sold off on Friday. And now we're starting to see a break of this trend line that we broke above from the highs in December, February, and then we broke above that level, and now we're coming back down to retest it. We closed below. That's technically bearish. We could head a bit lower, try to retest this more recent high at 613. Maybe that level will act as support. It's also a low volume node. And then we'll bounce from there, come back up and retest this level. If we can retest that level, that's a really solid position to actually start to go long in the market, and we'll have a move higher, or we'll reject and then we'll have a move lower, maybe around the 608 level, which is the start of this larger volume shelf. We could even try to get through that larger volume shelf back to where this US-China trade deal gap initially formed back in May. That would be a really strong area of support if somehow the market could get there. The only way that that is actually happening is if there's Russia and the US start to get into it, start fighting with each other. I don't think they'll ever actually do anything, but there could be an escalation there since like India is buying oil from Russia, Trump no likey, and maybe we could have some sort of escalation there and a deeper sell-off from this high on July 31st. But nonetheless, I am still bullish the overall market because we have not cut rates yet. At some point, the Fed is going to cut rates. The percentage odds have been all over the place. Before the FOMC in September, well, there was like a 98% chance that they weren't cutting rates on Wednesday, and they didn't. Now, there was like a 65% chance before the FOMC that they would cut in September, but that has since dropped to 35% after FOMC. But after the jobs data on Friday, this actually went back up to 77%. So now there's a greater chance that there's going to be a Fed rate cut on the 17th of September than there was before and after the FOMC meeting. And now because of the jobs data, which is a lot, the actual unemployment rate is higher because the participation rate is lower. So unemployment, although it was at 4.2%, is actually probably closer to like 4.8, 4.9%. And over time, that is going to weaken and get worse as there's just more layoffs and the economy starts to slow. Right now, everything is being buoyed by AI, and that is helping these large tech companies increase their bottom line, their earnings, and even their revenue. But at some point that is going to slow down. It's probably going to happen sometimes next year, and then we'll have like an actual real bear market. But because the Fed and the government have printed so much money over time, although this seems pretty insane at how high prices have come over the last decade, it's really not all that crazy. And these companies, although they are trading at pretty high multiples, in the grand scheme of things, it's not that crazy. You see all these things about like all the money's tied up in like 10 stocks. And that's certainly true. But that doesn't mean that the market's going to actually just start selling, right? Like I think that the market's going to look at rate cuts. When rate cuts start happening, money is going to pour into risk assets as we move from a somewhat restrictive rate policy to a more neutral policy, and that is going to be bullish for asset prices, right? Because people are hunting for yield. They're going to move away from fixed assets that are tied to interest rates, and they're going to look at more risk assets that also provide a higher yield than those fixed risk adverse assets like, bonds and things like that. Oh, that was hard to spit out. Anyway, let's look at some of these positions. So Apple stock, this one sold off really ugly. Earnings went well. It actually tried to get back over this uptrend line from April lows through June. And then we tried to sneak over it, but it just could not hold on Friday. Tim Cook, just stop speaking in these earnings. Like, just let someone else handle the earnings call. But nonetheless, at some point, this is going to reverse because they are going to buy an AI model for themselves and then actually figure out how to input AI into their product ecosystem. Apple arguably has the best brand of any company in the whole world. It's the most known of any brand. This did break down. It will probably come back down and retest this like $198 to $200 level. If it does that, this is a pretty decent area to buy the dip. There's also a gap which will act as support. But nonetheless, this little channel that it's been trading in for a period of time it's probably going to stick in here for a period of time before actually trying to come back up and retest this downtrend from December through February highs. Once it actually breaks over this, that's really solid confirmation that we're going to see a larger move. Apple does have an event on the 9th or the 10th where they'll announce like their product roadmap, and they are the most innovative they've been in a really long time. They just have been lagging behind all the other Mag 7 because they can't figure out AI. And like I said, because they're not retaining their AI talent, they're losing their employees to Meta and other companies. That's telling me that they have a different plan for AI, because they could easily pay these employees and retain them, but instead they're choosing not to. And that's signaling to me that they're most likely just going to be buying like Anthropic or Perplexity, right? And then just putting that into their products. So at some point that's going to happen. It's going to be a really bullish catalyst. We're going to send Apple higher finally. Next up is Baba, Alibaba, Chinese Amazon giant, basically just copies everything that Amazon does. But this stock has been trying to break out of this bottoming pattern. It's really sad that Charlie Munger died and can't see this one through. But I do think Alibaba just broke this more recent downtrend. China is probably going to perform well over the next 3 years of Trump's term, which is similar to what happened in his first term. They get off on the wrong foot in the beginning, but then they shake hands, they're best friends. And then, at some point, I think this stock's easily going to get through this bear gap that remains open. It rejected there back in March. I think at some point it's going to get through that 144 level, get over this 156, start seeing a push higher. And I think a lot of other funds are looking at China to actually start investing there, because China is not going anywhere. And right now we are holding above this breakout. If the market is green, which I think it might be tomorrow, Trump, I don't think he wants the market to go down. They're going to figure out everything, and then we're still going to have those rate cuts later on. And I don't think he's going to escalate with Russia, but you never know. He is a wild card. So we'll see how things go. But I would really like to see Alibaba push up to this 129, 130 level, back to this 143, and then try to get through this gap. It does have earnings ahead, so got to be careful there. Next up is Zeta. Zeta, I'm starting to build a position in with shares and longer dated call contracts. I might even start buying some leaps, but I am being a little bit patient because they do have earnings on Tuesday, August 5th. So we'll see how things go here. It's in a bull flag, so this is bullish. It's trying to break out of this more recent downtrend. It is in this larger broadening wedge, so a huge range that it's trading in. A lot of volume has shown up here recently. We're trying to see that volume show up here again. It retested, is holding this breakout of this trend line, forming a bullish consolidation pattern. But with earnings, anything goes. It is a marketing ad platform. Microsoft and Meta actually performed well on ad revenue. So I'm thinking that's probably the same case here for Zeta. Plus AI, they're trying to use AI on their platform to make it better for personalized ads for their customers. And I think that, as long as earnings go well, it'll break out of this bull flag. If it doesn't, it could fill back down this lower gap all the way to 1250. But depending on how earnings go, I might actually be buying the dip here on that, as well as like the overall market. Maybe things will sell off. But if it does break above this bull flag as well as this downtrend, that's really solid confirmation that we're going to see $18 really quickly, make a move towards this $20 level, and then even potentially test the upper end of this broadening wedge around $22 to $23. And if that breaks out, then we're off to the races. We can certainly start trying to test like 32 to even all-time highs at 38. This stock is growing. I really like the business model. It is really small compared to some of its competitors. There's a lot of potential upside here. And the only reason it sold off was I feel like this was a Fugazi short report that came out, and they implemented a buyback program of $100 million for the year after it. So yeah, I think this is just like a regulation oversold move. And I think this is going to probably break to the upside as long as earnings go well. Now, Neo is kind of like a love-hate relationship. Obviously, a lot of people got hooked, and this has just been like trending lower and lower and lower over time. It finally broke out, had that move higher, but then some of the delivery numbers were bad. the CEO has a chronic illness of just over promising and then under delivering, and it's super annoying. And we actually sold all the way back down to $3, but then we bounced, formed this bull flag, and then we broke out. Finally, the company is actually starting to deliver a lot. They're more focused on profitability. The CEO is realizing his mistakes and how he's trying to talk to investors and lead this business. And now he is hyper-focused on profitability. They did release the Firefly model earlier this year, and they're starting to expand into Europe. But they just also released the L90, which is like a large 7-seater SUV truck kind of car. And that's actually performing really well, I think. And it's at a really low price point. Like, these cars are so cheap, but have all these really amazing features. So much storage space, like perfect for families and all those things. And it's being received really well. And that's why it had a rally and was green on Friday, even though the market sold off. But if they can actually figure out their profitability, this stock could easily 2 or 3x over the next year. So we'll see. I mean, I'm kind of holding. I'm just like selling covered calls when it makes sense. But yeah, I'm really actually kind of surprised that at this price move, and now there's like some positive catalysts for this business. People are starting to notice there's so much volume here. So if this uptrend can continue, it'd be a really solid move to like start trading $9, $11, $13, even $16, just depending on if they're able to start to become gap profitable. Let's look at Grab. I mean, this week it reported earnings. I thought earnings were solid. It did well. Revenue is still growing at a solid clip. It's nothing like crazy where it's blowing. It's like a crazy high growth rate or anything like that. Like these modest, like low 20% growth rate year over year. And that's still solid for a company of this size. Now the C region, right? So Southeast Asia, I am really bullish on this area because I think it's exploding with like population and it's being modernized in a lot of different ways. And Grab is positioned really well. It's a ride-hailing service at heart, but it has other services like DoorDash or like food delivery, financial services, digital services, and all of those things sound great. But these super apps really do well in Asia markets for whatever reason. Here in the US, they don't, but over there they do. And they're starting to see a lot of growth in those other product suites. But nonetheless, this region is just going to explode over the next 5 to 10 years. I think there's going to be a lot of growth there. And what Grab is really focused on is similar to like what Jeff Bezos did with Amazon. He just wanted to provide really high quality services, and he was hyper focused on customers. And Grab is a founder-led business. I really like the CEO and founder. And he's focused on providing the best possible service for not only the customer, but the drivers as well as the merchants on their platform. And they do have a subscription model, right? So it's kind of like the same thing as like Amazon Prime or Uber Plus, in the sense that the more people that they get monthly transacting users on their platform, the more likely that they're going to subscribe to their subscription. That's revenue that is just straight to the bottom line for Grab. And so I think as they sign up more and more users over time, that's going to grow. They can offer that subscription, raise prices on that subscription to keep up with inflation. And over time, this stock is just going to head a much higher. Now, they do have $8 billion in cash. They haven't pulled the trigger yet. I think that's really smart because there's a lot of issues with the company that they were looking at as a potential acquisition that was go-to. They thought they were going to buy them. They still haven't pulled the trigger. This company is starting to have some like scandals and issues with corruption. They were like stealing MacBooks and stuff like that. So yeah, not too sure with what's going on there, but nonetheless, they could probably just wait, sit on their hands, and then either start doing share buybacks, which is bullish for the price, or they could acquire a company for a lot cheaper than they probably originally thought they were going to have to buy it for, which is also bullish for the price. And they can start to steal more and more market share and then get those users on their platform paying a subscription. And that's all going to go to the bottom line. Ton of cash flow positive all good things for this business. I think at least $10 going to trade, but this is most likely a $50 to $100 billion market cap over the next 3 to 5 years. And that puts the stock anywhere from $10 all the way to $20. So really bullish overall if you're just looking for a stock to buy long term. You got Ray Dalio in it, Howard Marks. You got different pension funds in the United States. You got the state of Texas, the state of New Jersey. They're even buying a lot of institutional ownership. So all good things for grab. Now, Unity Software, I beat this one to death, right? Like, we're talking about this stock every single week because it's really important, because I am a firm believer in making a ton of money based on Roaring Kitty having a position in this company, which if you've been following along, you're in my Discord, you know that I am 100% convinced that Roaring Kitty RK is in this stock. And I really think that this move at some point is going to have a really strong parabolic move to the upside. Now, we do have earnings this week on Wednesday. It's always a coin flip. This is also an ad tech play, right? So ads, that performed well with the other big tech. So maybe Unity Software will also perform well. They've had a lot of price upgrades up to $39 in this move from June into July, late July. Now it's starting to pull back down. It wasn't able to hold above this broadening wedge breakout, which is really unique. Like, I actually took a ton of profit here because I just there's no way this is going to hold. Roaring Kitty has been silent. He hasn't said anything since January 22nd, but the 30 call, $45 million original entry for January 2026, there's 80,000 open interest on that chain for that specific ticker or that strike. And that has not moved. Roaring Kitty is a degenerate. He always holds a lot longer than he should. And I think he's just doing the same thing here. He's just holding the stock. He is willing to ride the ups and downs, the roller coaster, like he did with GameStop. In the early days, he held the stock for over a year before the stock actually broke to the upside. And then he even held a lot longer than he should have. But nonetheless, I think he's in this. I have mostly December calls, so I'm front running his positions a little bit. I think he'll tweet definitely before the 19th of December because he doesn't want Theta to just destroy his position. And so I think he'll tweet before December. And when he does, I do think the stock could go up 100% from wherever it's currently trading at. Now, price could certainly come back down and try to retest all the way down to 24, 25, 28, or it could even just start to break back up over this 35.58 level, and then volumes starts to decline up towards $42 to $43. That's the more recent high. But if he tweets in any point, and with all the hype that he's been building slowly over time, just methodically with posting cryptic things. He just unfollowed one person on Twitter. He's showing that he's somewhat active on these platforms, but he has not said anything yet. And he's trying to build hype on this as legally as he can without trying to do a pump and dump thing. But if this stock does get up over 48 to 50, there's not a lot of volume here, right? So price can move very quickly. There could be a gamma squeeze. This could be picked up in mainstream media, and we could see a move over $65 to $73 or even more than that. GameStop did run over 270, 300% last year when he tweeted over 1 to 2 days. So it'll be really interesting to see how this one plays out. Very speculative. I'm not really a firm believer in this business for the long term, but we'll see how earnings go and see how things are changing. Are they actually growing this side of the business and contributing to earnings? I think they'll do well on earnings because the CEO is a pump spin doctor master. So we'll see how he does. Even if the numbers are okay-ish, I think he can at least try to pump the stock. The dude has a mouthpiece. He knows how to talk. Now, Tesla, this one I have not touched in quite a while. We did play this initial move from April lows up to 360, 365. That was a really strong play. We were hitting multiple baggers on that one. Now it's kind of slowed down. It broke below this trend line. It reclaimed this. We're actually playing it into the earnings, made some money on this move. But now it actually broke that wedge down. So it broke that more recent uptrend. It came back up, it retested it and rejected. And now we're seeing it reject even lower below this trend line. And so this can certainly fall a bit more depending if the market is weak. But people are just crazy. They love Tesla, even with really bad numbers. They think Optimus and all these innovation things that Elon's doing with the business, it's going to transform and be something completely different. And I don't necessarily doubt Elon. He's done really good things with SpaceX and Starlink. So I think at some point I am going to be buying back into Tesla, but I'm just waiting for some sort of bullish price action or like a false breakdown. Like if price somehow gets back up over this trend line, then I'm going to go long the stock. If it can get over like 332 to 336, break over this more recent trend, that would be like a false breakdown and then into a breakout. And then you're going to see a move retrace back to 365, but most likely push higher, right? Because each time this sells lower, you're like shaking out weak hands. And those people who are buying in at these price levels are willing to hold and let the price go a little bit higher before taking profit. So that's Tesla. American Airlines, we actually played puts. We haven't played puts in a while just because we're really bullish from the April lows. We were playing puts before the drop, and then we were playing calls on the way up. And now we are starting to look at like maybe potential put plays. We made like 43% here. This actually broke this bear flag, so this could continue lower, but I actually took profit on Friday because I don't know if the market's actually going to sell off. It did feel a bit like an overreaction to the news, and now you're starting to see like Bitcoin and Ethereum. Bitcoin like reclaimed this downtrend or that consolidation pattern. It broke down and now it's back over. And then Ethereum actually kind of a similar thing here. And I think Ethereum with all like the treasuries that they're creating, there's a lot more momentum here. We had this like 1, 2, 3 extended wave, and now we're pulling back down below this level. If we reclaim this like 36, 37 level on Ethereum, we're probably going to push up here to the 4,100, which is the more recent highs. But ultimately, we could definitely push towards all-time highs in Ethereum since it is lagging behind Bitcoin. It hasn't quite got there yet. SBET is the one that we actually starting to do like a poor man's covered call in, which is a more advanced options trading strategy where you're buying a long-term in-the-money call option and then selling short-dated call contracts as like a form of a covered call to generate income. So all these different type of strategies you can see in the Discord. I'm posting all my plays inside of the Discord. The market's really exciting right now. Futures are starting to bounce quite a bit. We got to try to get back over that trend line. And if we can do that, then this will be at least a retest and then we can continue higher. But like I said, market's really driven by headlines right now. But overall, whatever this pullback does happen, we're probably going to continue back higher into that at least the first, second, maybe third rate cut. And then at some point, the job market is going to accelerate at a faster clip, greater than the benefit that we're receiving from the interest rate cuts, just like we did in 2008 when the markets sold off and there was a recession. That was, at some point something breaks or the overall economy accelerates into a recession, and then that impacts the market. But that's probably some ways away. So I'm still bullish overall. This is just a short-term blip. Maybe it'll last a couple weeks, but I'm just looking to buy the dip on high-quality stocks. Interested in Grab, interested in Apple if it can actually figure out the whole AI thing. And then, of course, Alibaba and Zeta, starting to look at those as well and see if we can get some really solid moves to the upside. Now, I hope you enjoyed this video. I'm going to be posting throughout the week, give you guys the good, the bad, the ugly. Really just don't panic, okay? That's what I'll leave you with on this video. But like, subscribe, tell your mom, your grandma, your kids, your family member, the guy on the street, the homeless guy, tell the person at 7-Eleven, I don't care. Just pump the video, guys. I'm doing this all for free. I hope you enjoy the content. Next giveaway at 1,500 subs. We're halfway there. Let's get it, guys. I'll see you in the next one.